Yo, crypto crew, are you seeing what I'm seeing? Bitcoin setting up a massive bullish rectangle on the short term 4 hour chart. Altcoins, Ethereum getting ready to rip. We got cup and handle formations like everywhere. And we're going to, if you're not watching the charts right now, you're missing out what could be the next major move. Welcome back, Crypto Crew. It's your Professor Tom here. Make sure you get your number 2 pencil out because we're going to be going over some really sick things today. Make sure you give us a like. Make sure you hit subscribe. And don't forget to come on over and follow us on X where we talk about Bitcoin and crypto every day. We're going to be diving into some killer technical chart patterns. We're going to be focusing on the short term at first, and then we're going to go a little bit longer. We're going to be talking about a bullish rectangle. I'm going to give you everything that you need to know to understand this. We not only want you to listen to our analysis. We want you to be able to go do your own analysis. All right. So here's your Professor Tom coming at you with some technical analysis that you're not going to want to miss. All right. So these technical patterns actually are really important to know. Cup and handle, like we're going to get into on a longer term chart. We're going to be talking about that because this is important. These are all like technical patterns that, the novice and also, of course, the professional pays attention to. So these could be your ticket to catching the next big move. So grab a beverage of your choice. Let's hit the charts and let's set things up so that we can make money. Now, here's your first assignment for the morning. Okay, get your number 2 pencil out. Get your number 2 pencil out and write this down. Okay, because this is coming straight from Professor Tom. The market does not care about what you want. The market is not a living, breathing thing. It is the accumulation of everybody acting in their own freaking best interests, just like you. However, the market will reward you for what you know. And that's what we're going to be talking about today, giving you some information that you could pass along, share the video far and wide for people that really don't understand these patterns, and make sure you tell them to come on over, like, and subscribe our videos as well. All right, so let's talk about this bullish rectangle formation forming. What exactly is it? Well, as price oscillates between 2 points on a chart, as it gets actually crunching down and consolidating, it's basically just a temporary pause in a prevailing uptrend. When the price oscillates between the two defined support and resistance zone, okay, it's basically coiling, getting ready to make a massive move. Now, we've been talking about this for a while. A lot of other technicians have been talking about it, but I'm going to break it down for you. So think of this area here in the chart as a breather. Okay, this is basically the market just taking a breath, figuring out what's next move is going to be, and eventually we're thinking it's going to break up over through this resistance of 87,000 and take off. All right, so the bulls are catching their breath before the next push higher. How it forms? Well, the uptrend basically pushes us into the consolidation zone. It's a classical Wyckoff theory. You can get into that. You could start reading about Wyckoff. I do believe that if you are a technician, you really need to study Richard Wyckoff. It's very, very important to understand, his technical analysis. It's just a good overall understanding of supply and demand and how markets react and react. There's always a push and pull in markets. Okay, markets just don't go straight up all the time and they don't go straight down. There's actually reprieves. There's always counter trends to the trends. So, the saying goes, the trend is your friend until it bends. So you got to pay attention to the bend. Right now, we're not really in a bend. We are in a consolidation. So that's how it forms. All right. Again, we're going to go over it again. Write it down, your number 2 pencil. Okay. We had a double bottom here. Marketplace basically then kind of came back up. We've been in a massive uptrend, and we're going to go over that in a cup and handle. Now we're just basically consolidating between these 2 points, waiting for the breakout. So price gets rejected at the top, and when this is occurring, the price moves up, it gets rejected at a top. This is where the short-term sellers are coming in and they're pushing the price back down, okay? Then it falls to the lower level of support. Okay. Now, this happens multiple times, creating this rectangle that we have right now, right in front of your face. All right. So, the key idea is that the market's consolidating, not reversing. Buyers remain in control, absorbing any selling pressure within the box. Now, you could look at volume also. If we were looking at stocks, you can look at volume for, volume typically decreases when we're inside this rectangular formation. You watch for a spike in volume on the breakout, and that's your confirmation. So how do you trade it? Well, classically, how you would trade it was you buy a breakout of the resistance. Now, you just don't want to buy the breakout of the 86, 129 where the level is. You want to go where you know that you caught people by the short hairs. So in other words, right around 88, 89,000, you would say that up in this level, right up in here, is the level that you really would want confirmation to come through to show you that the marketplace is finally breaking. Okay, so that's that's probably the area where you'd want to really focus in on and get ready to jump in on the marketplace. All right, so now Bitcoin's been bouncing between, say, 82,000 and 82,500 and 87,000. Once it breaks above that 87,000, the measured projection of the target, okay, is basically the difference between the high and the low of the rectangle added to the top of the rectangle. So you're looking probably right around 93,000 for the short term, because this is a 4-hour chart. Now, I want to get into something a little deeper. And again, this is like, lessons, I mean, this is like just some super lessons for you guys that you can just absorb, okay? Because we don't want you, just listening to us. We want you to be able to determine for yourself one day, like, hey, I don't need these guys anymore, although I do appreciate what they've done for me. But, they taught me a lot. So here it is, bullish continuation pattern, cup and handle. It's ideal in strong uptrends. It signals a pause and then a resumption of the bullish movement. The cup and handle. Okay, so I'm going to look at the gold right here. See this? This is the cup. All right. So, and here basically is the handle. All right. So how you measure this is you take the difference between the breakout price of the handle, which is right around here, 2077. You go to the depth of the cup and you add it to the breakout price, and you get a target for it. Okay. Now this is a weekly chart, so it's a longer term, so it's showing a bigger movement. So obviously, the higher the time frame, the more of the larger movement you could assume from the formation. So if you're just trading a 4-hour chart, really, and that's all you trade, you're a day trader, you trade a 4-hour chart. When you go back to the chart that we were talking about here, all right, you're basically looking for your target. You got your breakout and you got your target. So you hit your target, good for you, you're on to the next trade. All right, but cup and handle is a little bit different because we're talking about longer term right here. So a rounded U shape reflects the recovery of a slight downward movement. Okay, it doesn't mean it's a downtrend; it means a downward movement. Okay, now the handle, okay, is also is a short downward to sideways drift of it's a final consolidation before the breakout. Now, the psychology behind it. The cup shows the transition from fear to optimism. Buyers step in slowly, absorbing the supply. The handle is all the people that are hesitating. They're not really sure. Okay, everybody wants to be sure, right? Well, if we could be sure trading, okay, there would be no trade to make because everybody would be sure and there'd be absolutely nobody to buy and sell. Okay, so we don't want, but this is where, the people that are, they hesitate. They think that they're buying a car. They're going to be kicking tires and understanding, like, let me look under the hood. Oh, it's only got 400,000 miles on it. Well, I think I can get another 100,000. How much you want for this thing? Think about that. The guy in the used car lot, the hesitation. All right. The breakout is above where the handle is. Okay. Now, what's your target? The breakout confirms a bullish strength and starts the next leg up. So the anatomy of the whole thing, all right, is there's no V shape. It's not, a deep movement down. It's not. It's a nice slow movement down. Okay, so we want a smooth base showing strong accumulation, which occurred here. It actually occurred in Bitcoin as well. We're going to get into that in a second. Volume declines during the formation. Okay, and spikes at the breakout upward. So, it occurs at the rim of, right, really at the rim of the cup. Actually, you could say the top of the handle. Okay. So entry is above the breakout right here. Okay. And the marketplace should be zooming. Now, what would be the target? Well, it would be the target. It would be the depth of the cup. So if we go to like a little bit longer of a term here, actually, we can actually zoom in on Bitcoin itself. I don't know why my charts are taking so long to show up here. But let me see here. Where's my cup and handle? It's not there. Okay, where is it? 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 Somebody moved my cup and handle. I'm sorry. That's about Bitcoin halving. But all right, so let's go back to the main chart right here. I lost my chart that I wanted to show you. But anyway, what we could do is we could take the difference between this and the bottom, and we can extrapolate it up there. We get a first target of 130,000. Okay, damn well get a pattern. Now it works. This is a pretty solid pattern. But, like anything in trading, there's always some risk involved. So let's move on to let's go over to altcoins. Okay. And we're going to be talking about this. Okay. Altcoin season is about to begin. Okay. Now we're looking at this. If you look at this pattern, altcoin season 2021 versus 2025, it's right here for you. Okay, history, doesn't exactly repeat, but it rhymes, right? So we know that this is starting. Okay, so why do we know it's starting? Well, we've been talking about this for quite a while. All right, and I want to show you one post that I have up here that is important to understand this whole situation. We got money supply. Okay, we've been talking about this forever. Okay, money supply is increasing. All right, globally, the U.S., China, and Europe are printing money like there's no tomorrow. Central banks are stimulating economies, flooding money with cash, and liquidity flows into assets, crypto included. Now, there's also a bonus to this. There's rumors of a U.S.-China trade deal, like just around the corner. But the most important factor of this whole bloody thing is why is this taking so freaking long? Is BlackRock is heavily invested in Ethereum. It's got 2 billion in Ethereum. This is serious money. Institutionals, and don't buy on hype. They buy on long-term conviction. If Ethereum breaks out, and I think that the price of Ethereum breaking out is around 2,100. If it breaks out, Ethereum's going to lead the way for all altcoins are going to start running. So watch closely. All right. So what do we got going? All right. We got global liquidity surging. We got U.S.-China trade deal flying. I want to point out one other thing to you guys before we wrap things up. Make sure you gotta come on over and follow us on our what's going on? My freaking charts, guys. Sorry. You got to come on over and click on the link below to follow our trading community. Okay, it's totally free to join.
Tight.
Okay, I don't need that talking right now. This goes to show you that we're not full of beans. Okay, we're not really so much into videoing, but we are into putting information out. So I want to show you right here. You just come over, please hit this, join our trading community. We're dropping insane alpha trades and trading opportunities daily, from breakouts, just like we're talking here, to long-term gems. We got you covered. We want you to follow our trades. with a solid broker. So make sure that if you're interested, you can actually follow us here on this link. Click on the link for our preferred broker right here. And that's about it, Crypto Crew. Before I get more technical snafus, drop your favorite chart pattern below. Make sure that you follow us on X, where we're dropping gems every day. And remember, always, always, always trade with your head, not over it. Make sure that you are trading within your means. And remember, always, always as a short-term trader, make sure that you enjoy the party, but you dance near the door. This is it. Tom signing out. Professor Tom for the day. I'm sorry there was such a lag in, I don't know, in what's going on here. But anyway, drop some comments below. Make sure that you really study what I gave you out there today. I think it's really interesting. And remember, always, like I said, follow us on X. And we'll talk to you in the next video. Cheers.